Hello everyone, welcome to Sane Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 5 of the Forex market review. Today being the first day of February here in Australia. I hope you had a successful January, the first month for 2017. Personally, I was up for the month, which is great, but I was a bit slightly disappointed that Trump had to come out with a few new signing agreements and talking the US dollar down and everything like that. So with all that uncertainty happening in the US, we did see the US dollar fall and the gold rally. So my last 3 trades, unfortunately, were opposed to those directions that the market traveled, and turned what was going to be a great month into a okay month. But to still come out with a 5% win with only 43% success rate, now that's a fantastic result in that. And that was all because of winning bigger than losing, and making sure that I was winning double the amount of money for the trades that I won and risking as small as I can for the trades that I lost. So in the end, a positive month is always a good month, and let's look forward to February. Without any ado, let's jump straight to those charts. So what we're going to look at is a couple pairs that I took, which didn't quite turn out how I had planned. So here on the USD yen daily chart, we would have seen this, which looks like to be a wave 1, 2, up for 3 and down for 4. This being the large AO, so this is a move up for 3. And we know it sort of ended when we see it cross below the line. So we really want to know how far will it pull back. And we're hoping it probably comes back to about the 50% mark, or this 200 EMA line on the daily chart. So what's that going to mean? If it bounces there, it's just going to find some good support, and you'll probably see this step up over time. So if it can also match up with this DSR zones on the left hand side here, then that will definitely be a good entry position. So based on this pull back to the minimum 38.2, I wanted to look for an opportunity higher. So I jumped down to the 4-hour chart, I looked for my divergence, and back before taking the trade I had my divergence here with my lower low-end price and my higher AO. Then we dropped down to the 1-hour chart, we saw it rally up to a wave 3, come back, retest the 200 EMA line, drew our Fibonacci retracement tool, and it came back to the minimum 38.2, and so therefore we're looking for pushback higher. Entering off the bounce of that 200 EMA, put my stop losses down here, looking for about 100 pip stop loss for a 200 to 250 pip profit, and unfortunately I was stopped out at these levels down here with the poor US dollar news. So it's not always a win, but the rules are there and we just follow them because I have a higher probability of winning. But is this trade over? Well, probably not at this stage. I mean, if we can get another lower low, so if we can get a lower low, we can probably look at taking this trade up again. We did mention earlier this week of a 1-hour short trade, so that was looking us to get into this position, and that one did pan out. So that one was a pattern trade, so we go from X to A, then A to B, and then we go from B to C and C to D. And where do we expect it to go? Well, we're using our Fibonacci tool. We expect it to pull back to the between the 78 and 88.6 area, which it did. Now using this entry there, putting stops just above these highs of probably about 50 to 70 pips depending on where you want to go, and then using the Fibonacci in the reverse direction from those lows to the actual highs. We're looking at first exits at the 38.2 with second exits at the 61.8. Both of those did deliver. So if you're risking, say, 60 pips and you took to target 2, you definitely got your 120. So you're 1 for 2 risk to reward. So that was a bearish pattern, and that hopefully wouldn't have stopped me out, but because it then bounced along this area, the 61.8, I had my stops just below that. It just poked down, stopped me out, and then it carried on lower. The gold trade was same after, because it works in parallel with the USD yen. It sort of correlates in the opposite direction. What I was looking at after I got stopped out of the gold, I decided to enter this market as well. Looking like we have a pullback to 38.2, going short on a 1, 2, 3 pullback for 4. Dropping down to the 4-hour chart, we had our higher high in price with our lower AO, and then dropping down to the 1-hour chart for entry. We see 1 up for 2, down for 3. To identify 3 easiest ways is look for this large AO. When it comes back to zero line, we know that's a bottom. Use your Fibonacci tool from the high to the lows. If you want to figure it out, just go all the way back to the beginning, and that's roughly where the start is. If you can't sort of see it, sometimes you can't see 1 and 2. And then we had a pullback for a minimum of 38.2, but I did not enter at this point here because I was already in the USD yen trade long, and because they correlate, I didn't want to double up. And then once I stopped out, I saw this ABC pattern to this level here, pulled back to 61.8, enter the market on this candle there, put my stop losses up here of about 100 pips, trying to go for 1, 2, 3 below these lows. Unfortunately, with further talks in the US by Trump, the gold strengthened even further, which then stopped me out. Both of them, as per the rules, and I always recommend do not take correlating pairs, because if one delivers, they both deliver, or if one stops out, they both stop out. However, if you have exited a trade for either a profit or a loss, you can then consider a new entry for the other correlated pair, because they're no longer being traded together, and you can get in at a better price, as I did in this one, but unfortunately I still stopped out. Now, the only other trade I've really got looking at the moment is a pattern trade for the pound Aussie. Now, the Aussie USD pattern hasn't set up just yet, but there may be one setting up. We can get a bit of a pullback on the pound Aussie. So what we do is, I'll just go zoom in a little bit for you. We do from the X to A, which is the first impulsive leg. Then you go from A to B, first pullback. Then you go from B to C and C to D. And where do we think this will end? Again, grab your Fibonacci tool, and we want to, from point X to C, we expected to pull back roughly between the 78 to 88.6. In this case, this wave pattern is about the 88.6. So when we see it come there, we can have a pending order ready with our stops above the highs, probably about 300 pips. And we're looking at getting out towards these bottoms, definitely. But where would you like to get out? Well, let's say it goes there. All we do is just use our Fibonacci tool in the reverse direction, have that whole leg move higher. So from the bottom to the top. First place is 38.2 and 61.8 is your second target areas. They're the two standard levels we like to get to. So if we can get in there, have a 300 pip stop loss, we can definitely make our 1 for 2 to this level here. And if we pushed even down lower, we can make our 1 for 4. So that's going to be a very good risk to reward on this pattern, setting up on the daily chart on the pound Aussie. So thank you for that. I hope you enjoyed this video. Just goes to show we can't always win, and if you look at my Twitter feed and also these videos, you'll show I'm open and honest, and I'll show you the losers as well as the winners, just so you know and you can see over time how probability works in your favor. And as long as you're risking less than what you're trying to make, you're going to have a better success rate. And as I've seen, I had 3 wins with 4 losses with a 43% success rate for January, and still managed to come out with a profit. So that was fantastic. So here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.